Alphabet Incorporated, aka Google, just released their latest quarter's earnings report, and they are up big after hours, up around 12%. Now, they did beat on the top and bottom lines of their recent earnings report, but in even bigger news, they just announced their first dividend ever. They're going to be paying a dividend in June. So in this video, we're going to be looking at the dividend metrics for this company, looking at Google from a dividend perspective. So let's go ahead and jump into it. What do we know about Google's most recent dividend payment? Well, if we jump over here, they announced a dividend payment of around 20 cents per share. So what does that mean? Well, annually, that's going to come out to around 80 cents. So we can take this number and multiply it by 4. And again, we can see the dividend payment, 20 cents, annual dividend at 80 cents. So what does that mean their dividend yield is going to be? Well, we can easily find this. If we come over here, we can use the ticker data live function to pull in Google's live stock price, which is the first thing we need in order to find the dividend yield. So I'll go ahead and hit enter on that. And you can see the live stock price for Google as of this very moment. Now, if we come over here, what we can do is we can take the annual dividend and divide by Google's current share price. When I hit enter, you can see that's going to give us a starting dividend yield sitting at 0.51%. So yes, this company has a very low starting dividend yield, but I want to show you something. If we jump over to our stock screener tab, let's go ahead and zoom out a little bit. I've already plugged in Google right here. Look at the free cash flow per share growth of this company from 2013, 85 cents, 2023, $5.50. So their free cash flow per share has exploded during this time period. Now, what does that mean? Well, every single year, Google has more and more ability to pay out bigger dividend payments. So let's go ahead and go back over to our Google dividend breakdown and zoom back in. I want to know what the payout ratio for this company is and the cash flow payout ratio. We want to know how much of their capital is going to have to be used to pay out this dividend. Now, for the payout ratio, what we're going to need to know is what their current earnings per share is. And I want to know what it is as of 2023. So again, I'll come over here and use the ticker data function. We'll plug in Google, add a comma, EPS, and comma 2023 and close this and hit enter. And we can see here the earnings per share is going to automatically load in at $5.84. So if we want to know the payout ratio, here's what we can do. We can take the annual dividend and divide this by the payout ratio. So we can see the payout ratio based off their annual dividend and 2023 earnings per share. This gives us a payout ratio of around 13.7%. So that is a very low payout ratio for this company. They're having to use very little of their earnings to pay out this dividend. Now, in my opinion, one of the most important payout ratios is going to be the cash flow payout ratio. I think this is actually one of the most important metrics we should always look at as dividend investors. And so basically what we need to do now is, again, we'll use the ticker data function, and I need to see what Google's free cash flow per share was in 2023. So I'll just go ahead and type in that free cash flow per share, and we want to see it for 2023, and I'll hit enter. So again, this is going to be a big teller of how much free cash flow they're having used to pay out dividends. Free cash flow per share came in at about $5.50. So again, what we can do is we can take that annual dividend and divide by $5.50. So we can see the free cash flow payout ratio for Google going to come in at about 14.54%. Now, this is a very important metric in my opinion. We have to keep in mind, what are the other options for Google? How can they use their free cash flow? Well, for a high growth company like Google, most of their free cash flow is going to be used to reinvest back into the business. And that's no surprise why they would do that. If we zoom back out, we can see the company has been growing rapidly. And the reason behind that is because they reinvest heavily back into the business. But for a lot of these growth companies, it gets to a certain point where they're generating so much cash and so much revenue, they can't intelligently reinvest all of it back into their business. And that's the point at which it makes sense to start paying out in dividend, and that is what Google has decided to do. They're not saying that their high growth days are behind them. They're basically saying they're generating so much in cash every single year, they don't know what to do with it. They don't know how to intelligently reinvest all of it back into their business. And because of that, they have decided to pay a very modest dividend, a dividend yield of 0.51%. Now, like I was just pointing out, their ability to continue to increase the amount they pay out in dividends is astronomical. Now, if we jump over to our dividend breakdown sheet, obviously there's not any data here since they haven't historically paid a dividend, and they just announced this news a few hours ago. But here's what I do want to point out. Look at the 10-year free cash flow CAGR. 20%, in the 5-year, 25%. So keep in mind, if they want their free cash flow payout ratio to stay at around 14.54% moving forward, and free cash flow is growing at around 20 to 25%, that means this company has the ability to grow their dividend payments at a rate of around 20% every single year without their cash flow payout ratio increasing. That's a pretty unbelievable thing to think about. So obviously Google's probably not right for you if you're someone looking for immediate dividend income, but if you still have a long time horizon, Google will be able to pay out more and more in dividends by a large amount every single year. The company is rapidly growing their top and bottom lines and has very high levels of return on invested capital, meaning they're going to be investing into very profitable projects. And Google's also now joining the likes of Meta, Microsoft, and Apple, these other high-growth tech companies that have decided that it does make sense for them to pay a dividend. One of my favorite stocks, Microsoft, has now been paying dividend payments for over 10 years now, and the stock has performed absolutely phenomenal since then. So it's important to keep in mind that these tech companies that are announcing dividend payments, it's not a sign that their high growth days are behind them, it's just a sign they have more cash than they know what to do with. So in my opinion, I'm a huge fan of the news from Google. I think a small dividend payment can make sense for this company. But go ahead and let me know what you think of this company in the comments down below, and like always, if you'd like to get access to the ticker data add-on and ticker data function in Google Sheets and any of my spreadsheets, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.